The topic that we are going to discuss, as I have said, is the last type of adjusting journal entries. We have already discussed estimates and we have already discussed deferrals. And we have learned that deferrals is delaying the recognition of expense for those portion of expense that still has future value. And now we're going to discuss accruals. And accruals means increasing. Increasing what? Okay, we will increase an expense, thus we will increase a liability. And the first class of accrual is on accrued payable. So accruing payable for expenses that were incurred in the accounting period but not yet recorded. So may mga expenses na hindi pa natin nare-record. So we will record that. We will increase those expenses by recording it. And then we will credit the corresponding liability account which is payable. So the expenses that we will record are related to utilities, salaries, rent, taxes, interest. Okay? So if we will increase this, record this, then the other account will be the payable account. We can use accounts payable, accrued payable, or accrued payroll payable. For payroll, you normally maintain a separate account. Maintain a separate payable account for payroll, separate from accounts payable. Okay? We will discuss later on when to use accounts payable and when to use accrued payable. So for situation like this, accrued payable and accrued payroll, you know that if it is for salaries, it should be payroll, okay? And the other class of accrual is accrued receivable. Accruing receivable for revenues that were already earned but not recorded or will only be collected on the next accounting period. So in this case, may mga revenue tayo na na-earn na natin pero hindi pa natin siya nare-record in our books. Okay? So in this case, we are going to debit the receivable account. By the way, the revenue that we can accrue are interest income or rent income, and these are other income. Yung mga regular revenue natin, service income for service business, and sales for merchandising business, hindi natin sila ina-accrue. So, ang ina-accrue natin ay yung other income lang. Okay? So, in this case, we will have if we will increase or we have earned interest income or rent income, we are going to debit interest receivable or accrued rent receivable or accrued interest receivable and credit the income that was earned. Okay? Okay, class. Let's continue. Let's take a look of the accounts para malaman natin kung ano yung mga ina-adjust natin. Okay? So, ito maganda to para nakikita nyo yung mga accounts na ina-adjust natin. Okay, we have here the real and now the nominal accounts. In the nominal accounts, you have the revenue and expenses. And plus, ang ina-adjust natin ay itong mga expenses. Okay? Salaries, by the way, supplies, hindi natin ina-accrue yan. We have already discussed this. Ang adjusting journal entry natin, yung type ng journal entry na ginawa natin sa supplies is deferral. So, sa accrual, ang rent expense na discuss na natin sa deferral dito. So, rent expense can be in the form of deferral or in the form of accrual. Depende sa situation. Okay? Okay. So, in this case, ang ibig sabihin nito, hindi mo pa nare-record. Okay? By the way, rent expense, basta deferral siya, na-record na siya either as expense or as a prepaid rent. But in this accrual, hindi na-record yung expense. Kaya kung hindi na-record yung expense, i-debit natin yung expense, i-record natin, and we are crediting a payable account. Pwede nating i-credit yung accounts payable or we will credit an accrued payable. Accrued payable, bagong account yan. Okay? Bagong account natin yan. So ito ang ginagamit, either accounts payable or accrued payable. In the next slide, malalaman natin kung kailan natin gagamitin yung accounts payable at kung kailan natin gagamitin yung accrued payable. So in this case, class, for accrued payable, the rule on adjusting journal entry, one real, which can be accounts payable and accrued payable, and one nominal, which can be one of the expenses. So here we are debiting expense and crediting payable account. Okay? Okay, class. So now we're going to discuss when to use accounts payable and when to use accrued payable. So if 100% of expense to accrue is for the current year, yung i-record nating expense is lahat yon para sa current year, we will use accounts payable. Okay, if portion of the expense is for the current year and the other portion is for the next reporting period, ang ibig sabihin yung expense na yon, portion nun mapupunta sa reporting period, sa present reporting period, and yung portion naman will be on the next reporting period, bali hati o ganon, okay? And then we will use accrued payable. Okay? However, I would like to emphasize at this time, basta gumamit tayo ng accrued, okay, dapat ang kasunod nun will be reversing entry. We have to prepare reversing entry. Okay? I will discuss what is reversing entry afterwards. So let's discuss utilities, class. Transaction received the electric bill from Meralco amounting to 18,000, covering the period from November 26 to December 25 on January 4, 2018. Okay, it was only on January 4 na na-receive natin yung bill. Kaya doon lang tayo nagka-idea na meron pala tayong 18,000. 18,000 pala yung bill natin on this period. So you will note that the bill is only for 2017. Okay? So, however, if we receive the bill on January 4, 2018, okay, and if you record the bill, debit utilities expense, and credit accounts payable, mali ito. Bakit? Kasi dapat itong bill na to ay hindi para sa 2018. Dapat itong utilities expense is for 2017. So, in this case, dapat hindi natin ito i-record ng ganito. What we have to do is we have to record this bill as an adjusting entry. Okay, and the adjusting entry, it has to be dated December 31, 2017. Kahit na na-receive natin ng January 4, 2018, pwede natin siyang i-record ng 2017 provided na ang posting date, kung yung date na ipopost niya sa general ledger, which is in T account, will be dated December 31st, 2017. Okay? So, dapat itong entry na ganito, dapat papasok siya sa 2017 debit utilities expense and credit accounts payable at 18,000. So, wala tayong dapat entry na ganito ng January 4. Okay? Na-receive natin siya ng January 4, pero i-date natin yung recording na ito as December 31st, 2017 as our adjusting entry. Okay, so kung babayaran natin to, if we will pay this, we will just pay debit accounts payable and credit cash of 18,000. Okay, class? And next is utilities expense, but at this time, we are going to illustrate the use of accrued payable. So accrued payable, if portion of the expense is for the current year, and the other portion is for the next reporting period. Okay, this is our transaction from the previous slide. And now, because we are going to demonstrate here, illustrate accrued payable, so the period supposed to be, will cover two periods, the period of the utility bill. So the utility bill is from December 26, 2017 to January 25, 2018. We are on calendar year, so two periods. So on January 30, 2018, when we receive the bill, okay, we can immediately record debit utilities expense 18,000 and credit accounts payable. Why? Kasi alam natin na yung portion nito na utilities expense is really for 2018. Doon sa kabila, doon sa previous slide, hindi natin pwedeng gawin yun kasi alam naman natin na lahat yun is for 2017. In this case, alam natin na 2018, kasi hanggang 2018 yun, portion of this 18,000 is really for 2018. So we can go ahead and record this. Debit utilities expense and credit accounts payable on 2018. However, we have to make sure that we will record portion of the utilities expense sa 2017 by doing an adjusting journal entry. So, dapat ma-record natin kung magkano yung expense ng 2017. Okay, so what we have to do is analyze the bill. Yung bill natin is 18,000. Okay? And this is from December 26, 2017 hanggang January 25, 2018. So, itong 18,000 na ito is a consumption for 30 days. Kung kukunin natin yung daily, normally ganito ang ginagawa. We determine the daily value para sa ating adjusting journal entry. So, if we are on December 31st, alam natin, makikita natin from here na December 26, 2017 to December 31, 2017, yaan ang expense for 2017. Okay? So, yung expense niya for 2017 is for 5 days consumption. 26 to 31, that will be 5 days. Okay, 31 minus 26 is 5. Or 26, then you count 27, 28, 29, 30, 31, so it's 5 days. Okay, so now 5 days, and for 2018, that will be from here to 25. So that will be equivalent to 2018 expense, that will be equivalent to 25 days. Okay, so 25 days times 600, that will be your 2018 expense. So here, 5 times 600 will be 3,000. 25 times 600 will be 15,000. So now we can prepare based on this analysis. Alam natin 3,000 ang expense ng 2017. So on December 31st, 2017, we can record the adjusting journal entry by debiting utilities expense 3,000 and credit accrued payable. Okay? Accrued payable kasi 2 periods yung expense ng utilities. It is for 2 periods. So the first entry that we have to do on January 1st is the reversing entry. Reversing entry, lahat ng accrued natin, i-reverse natin. So in this case, if we have done the reversing entry, if we will make analysis of the entry, we will cancel out the reversal, the accrued payable rather. And here, ang matitira, utilities expense, 2017, 3,000, tama. 3,000 yan. And for 2018, meron tayong record na 18,000. And then merong credit that due to the reversal of 3, 18 minus 3, the expense is 15,000. So if we want to pay this, we debit accounts payable and credit cash. Okay? Next class is accrued payable in relation to salaries. Okay, this is our transactions. On January 14, 2019, the payroll department processed payroll checks for 40 employees covering the working period from December 22, 2018 to January 6, 2019 amounting to 150,000. So, class, nung yung payroll na ito, class, nalaman lang natin yung amount nung natapos na yung payroll on January 14, 2019. So, on January 14, 2019, of course, the company will pay the payroll right away. Debit salaries expense, 150,000, and credit payable is sinet up mo na yung payable at kung gusto ng bayaran, debit payable and credit cash. Okay? Now, class, itong 150,000, pwede nating record ng lahat sa 2019 kasi alam natin portion of the salaries expense is for 2019. Okay? So, pwede na natin siyang record yung buo doon, okay, sa 2019. However, we have to segregate the portion that is from previous year, which is for 2018. So in this case, we have to prepare an adjusting journal entry for December 31st, 2018. Okay? But before we can prepare, we have to analyze first. magkano ba yung payroll ng 2018 at magkano ba yung payroll ng 2019. So we have to analyze the payroll. The payroll is from December 22 up to January 6, 2019. The payroll is 150,000 and the number of days from December 22 to January 6, that's a total of 15 days. Okay, so 150,000 divided by 15 will give you 10,000 per day na payroll, okay, by the average. Okay, we are doing the adjusting journal entry on December 31st, 2018 for us to know kung magkano yung salaries expense ng 2018. So this December 22 to December 31st, that is the 2018 expense. And from January 1st to January 6th, that is the 2019 expense. Okay, so now we were able to get the per day. So it's good that we have to determine how many days from December 22 to December 31st. So that's 9 days, okay? And then 9, and for the 2019, that's 6 days. So 9 days times 10,000 will give you 90,000. And 6 days times 10,000 will give you 60,000. Okay, class, kung paano nakuha yung 9, madali naman yan. Na-discuss na natin yan. Yung sa terms on sale natin. So 22, 23, you just count with your fingers. 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. So that's 9 days. Okay? At ganoon din sa 2019. So you start with 31. 31, January 1st is 1, 2, 3, 4, 5, January 6. Okay. Okay, now we can record the 90,000. We debit salaries expense and credit accrued payroll payable 90,000. And you have to do the reversing entry on January 1st, the reversing entry debit accrued payable and credit salaries expense. Analyzing all of these entries, there is a cancel out there of accrued payroll payable. So here you have a recorded on 2018 a salaries expense of 90,000, which is correct as far as our analysis is concerned. And on January 14, you have a recorded a salaries expense of 150,000, but because of your reversing entry, the salaries expense was reduced by 90. So the net balance of 2019 expense for salaries is 60,000. Okay. Okay, next is interest expense. Okay, this is our problem. The company has 120-day loan with BDO amounting to 300,000, which was secured on December 1st, 2017. The interest on the loan is 10% for 1 year. Okay, so adjusting journal entry, we have to know how much was the interest expense from December 1st that we have gotten the loan up to the end of our accounting period. So accounting period natin in this case is December 31, 2017. So we have to compute the interest and we have to prepare an adjusting journal entry. Okay? Okay, so alam kasi natin na makakagawa na tayo ng adjusting journal entry kasi itong mga information na to is sufficient for us to compute the interest expense as of December 31st, 2017. How are we going to do that? Okay? Interest as of December 31st, 2017. First, alamin natin kung ilan days from December 1st to December 31st. So, the period is December 1st to December 31st. Ilang days yan? Kasi doon natin ibabase kung magkano yung interest. So, meron tayong 30 days na dapat expense na ng babayaran as of December 31. That's 30 days na. Okay? So, it is just December 31st minus 1. That will give you the 30 days. Okay? And we need this information. The amount of loan and the interest rate for us to compute the interest. The formula for the interest is principal times rate times time. Time is expressed in year. So this time is kung 1 year, 1 lang siya. Kung 2 years, 2 siya. Okay? So interest equals principal times rate times time. If we are going to substitute, interest equals principal will be 300,000. So interest equals 300,000. Ang rate will be 10%. So that will be times 10%. Okay. In as much as we are just getting the interest for 30 days, okay, so this 1 year will be uh, converted into a number of days. In interest calculation, we are using 360 days, okay, not 365, but 360 days. So the interest that we are going to compute is for 30 days over 360 days, okay? So the interest will be equivalent to 2,500. So, ang ibig sabihin itong 2,500, ito ang interest for 30 days. Okay, so in this, we can already prepare our adjusting journal entry. We debit interest expense 2,500 and credit accrued payable 2,500. Okay? And we have to prepare our reversing entry on January 1st. And our reversing entry is reversing this, debit accrued payable 2,500 and credit interest expense 2,500. Now, what is the other transaction for this loan? Okay, the other transaction would be recording the full interest on maturity date. Okay? Kasi yung maturity date niya will be 120 days from December 1st. So, kailan yung 120 days from December 1st? So, yun ang aalamin natin. Okay? Doon mo siya i-record yung full interest on that day. Okay? So, we have to know the maturity date for 120 days. So, on December 2017, you already have 30, which is this. Okay? Meron ka ng 30. On January 2018, January has 31 days. February has 28 days. And March has 31. So if we will add all of this, we have already reached exactly 120 days. So it means that the maturity date will be on March 31st, 2018. So this question mark will be March 31st, 2018. So we can now record the full interest on the loan, buo, for 120 days. Okay. So we have to compute the interest on maturity date. The principal will remain as is, the interest will remain as is. Ang magbabago lang is itong 30 over 360 because this is the interest for 30 days but we are computing the interest for 120 days. So, ang ating time will be 120 over 360 and will give us 10,000. So, ang ating full interest on maturity date will be debit interest expense 10,000 and credit interest payable. So at that, hindi na natin ginagamit yung accrued na yan. This is only for adjusting journal entry. Okay? So if we are going to analyze the accounts, there is a cancellation there of accrued payable. The interest for 30 days is charged under 2017 period. And for 2018, you have 10,000 minus 2,500, that is 7,500, and that will represent for interest for 90 days because 30 days is for 2017 and 2018 is for 90. 120 minus 30. Okay, class? Now, let us move on. And now we are going to discuss accrued receivable. Tapos na tayo sa accrued payable. Sa accrued receivable na tayo. And we are going to discuss interest and rent income. Medyo bago tong accounts na ito sa inyo. So, let us explain this. So, this is our accounts na you are familiar with. And our nominal accounts, you have the revenue. And for service, you have the service income. For sales, for merchandising and manufacturing, you have the sales income, okay? Sales revenue. And our expenses, okay. So when we speak of accrual, okay, what we are accruing is other income, not the regular revenue accounts. But the other income. And that other income is rent income and interest income. Rent income, basta meron tayong extra space, pinaupahan natin, then we will have an income from that. A rent income from that. Yung interest income, meron naman tayong customer na nangutang, then we can give our, we can generate interest from that, a loan from our customers, to a loan to our customers. Okay? Okay, to increase this, kung meron tayong na-earn na rent or interest income, we will increase this by crediting, of course, the income and debiting a receivable account. We can debit rent receivable or accrued rent receivable. Rent receivable is used kung yung income na na-earn natin is only for the current year. Pero kung mag-spill over the next reporting period, we will use the accrued rent receivable. Same concept with interest. Okay? So we will have to debit the receivable account and credit the income, the other income account. And we will comply with the rule on adjusting journal entry, one real and one nominal account. Okay, let's continue. So now when to use rent or interest receivable and when to use accrued rent or interest receivable. Medyo nasagot na natin yan. Same concept with the payable. If 100% of income to accrue is for the current year, use rent or interest receivable. If portion of the expense is for the current year, the other portion is for the next reporting period, use accrued receivable. And accrued receivable would be accrued rent or accrued interest. However, you have to make sure that you are going to prepare the reversing entry on the beginning of the next reporting period, reversing your accrued receivable. So if income is only for the current year, this will be your pro forma journal entry, debit interest receivable, credit interest income, or if it is rent income, debit rent receivable, and credit rent income. And if portion of income is for the current year and portion is for the next reporting year, that's the time you are going to use accrued interest receivable and accrued rent receivable. But make sure if you use the accrued receivable as adjusting journal entry, you have to make a reversal entry in the beginning of the reporting period of the next year. Okay? So let's have an illustration, unrecorded rent income. And in this illustration, income is only for the current year. So anong gagamitin natin? This journal entry. So for rent income, the company is subleasing portion of the office space at monthly rental of $25,000. For the month of December, the bill was only prepared on January 2018. So simple lang yan, we debit our adjusting entry with debit rent receivable and credit rent income, okay? Because it is only for the current reporting year. Okay, class. So if we have, we are going to use what we call, if the rent income is for 2 reporting period, and this is our illustration, income is for the current and next reporting year. So in this case, our transaction, the company is subleasing portion of the office space at monthly rental of $30,000. For the rent December 16, 2018 to January 15, 2019, the bill was only prepared on January 30, 2019. So ang ibig sabihin, kahit na yung rent ay kino-cover 2018, yung income natin 2018, 2019, nagawa lang natin yung bill ng this January 30, so hindi natin siya na-record. So in this case, we are going to prepare the adjusting journal entry. So we have to make sure that we will record this, the portion. Okay, we have to make an analysis. Based on this, we can make an analysis na, okay? Sufficient na yan para malaman natin kung magkano yung ating rent income for 2018. Okay, we have, the period is December 16, 2018 up to January 15, 2019. And the rent income is $30,000 and it is for 30 days during this period. And per day will be $1,000 per day. we are doing an adjusting entry on December 31st, 2018. So how many days? December 16 to December 31. That will be the income for 2018. Okay, and that will be, and January 1st to January 15th, that will be the income for 2019. So 2018, you have 15 days, and 2019, you also have 15 days. So 15 times 1,000, you will have 15,000 total. Okay, for 2019, your income will likewise be 15,000. So here, in as much as you know already your income as of December 31st for the 18, you earned income as of December 31st, you have to debit accrued rent receivable of 15,000 and credit rent income 15,000. In as much as you have used the accrued, you have to make a reversing entry on the first day of the next period. On January 1st, 2019, reverse this, debit rent income and credit accrued rent receivable. And now, okay, class, for on January 15, that will complete your the rental, okay? However, you only prepared on January 30. So on January 30, if you are going to record the rent for the month on January 30, you will debit rent receivable and credit rent income. So if we are going to analyze the entries, your accrued rent receivable was recorded as adjusting entry, and then you have reversed it, so it cancels out. So ang natira, meron kang rent income on 2018 na 15,000. 2019, ni-record mo yung full rent income na 30,000. However, you have made a reversal of 15,000 here, okay? So your net rent income is 15,000, which is in accordance with your analysis. Okay, class? Let's move on. Interest income. Portion of income is for the current year and other portion is for next year. Okay. Illustration, unrecorded interest income. The company gave a 90-day, 10% per year promissory note of 100,000 dated November 25, 2017 to customer. Nagpautang ang company sa customer. Okay? Ang term ng loan, 90-day, 10%. Ang principal, 100,000. Okay. So we can prepare the adjusting entry right away because kompleto naman yung data. Okay? We can compute the interest. So the interest income as of December 31st will be from the date that you have extended the loan to your customer, which is November 25, 2017, up to December 31st. So let's determine how many days yan. So yan ay from 31, you have on November 30, ilan days yon? 5 days. Okay? 30 ang November kasi, minus 25, yun yung date ng loan. And for December, you have 31 days. So, for 2017, yung days na income na na-earn mo is for 36 days. So, you have 36 days here. So, we can compute the interest for 36 days. So, we need this information. You have principal of 100,000 and interest rate of 10%. So the formula is same lang naman because we are computing the interest. So interest equals principal times rate times time. As I have said, this time is 1 year. And we are only computing the interest for 36 days. So 100,000 times 10 times 36 over 360 days. Again, we are not using 365 for interest, but we are using 360 days, okay? 360 days in 1 year. So with this, the interest as of December 31st, 2017 is 1,000. So we can record now, okay, debit interest, accrued interest receivable 1,000 and credit interest income 1,000. Accrued kasi 2 periods, okay? Reversing entry, we will reverse this, debit interest income, and credit accrued interest receivable. Okay? And now, let us see kailan dapat bayaran ni customer para ma-record natin yung full interest. Let's determine that. Okay? Let's determine kung kailan yun. So, on December 31, you already have 36 days. Ang term ng loan is only 90 days. So dapat alamin natin kung kailan maturity yung 90 days from November 25. Okay? So December, as of December, you have already 36 days. January 2018, we're trying to compute the due date. January 2018, you have 31. Okay? May 90 na ba yan? Hindi pa. 67 pa lang. So on February, you have to complete the 90 days, you need 23 more days. That will give you a total of 90 days. So in effect, itong kukolektahin natin sa customer so we can record the interest. We have to record the interest, the full interest on February 23, 2018. That's the due date or the maturity date. So here, February 23, 2018. And now we have to compute the interest for 90 days. Okay? Kasi yun yung full na interest na babayaran. To compute that, same, we are going to use this formula. Okay? However, imbis na 36 days, gagawin natin itong 90 days. And 90 days will be equivalent to 2,500. So on February 23, we will debit interest receivable 2,500 and credit interest income 2,500. So if we are going to analyze the entries, there in 2017, we have recorded 1,000 here, interest income, for 36 days. And for 2018, we have recorded the full interest for 90 days of 2,500. Pero for 2018, ang natirang days lang is 90 minus 36, that's 54. Tama ba? 54 days. So, ang 54 days na interest niya is equivalent to 2,500 minus 1,000, 1,500 na interest income.